Good day everyone, I am Rica Bea Nepomuceno and together with my partner Zyril Pagolong, we are assigned to discuss chapters 20 and 21 which cover wasting assets and investment property. So today I will be focusing on wasting assets by solving a comprehensive problem, but before we dive into the problem, let's first have an overview of what wasting assets are. So, wasting assets refer to natural resources and minerals with economic value such as coal, oil, or precious metals, which are gold and silver, and gemstones, which are diamonds, emeralds, and etc. So, as the name suggests, these assets go through a wasting process, meaning they are physically consumed and cannot be replaced by human efforts. While some may be replenished through natural processes, the time required for regeneration is often beyond human control. Now, to gain a deeper understanding of this topic, let's proceed with solving our comprehensive problem. So this problem involves Mika Joy Mining Corporation, which acquired mineral resources and equipment. Moreover, it focuses on the cost of wasting assets with estimated restoration cost, depletion, and depreciation of movable and immovable equipment. Now we will compute the following. First is the initial cost of the mineral deposit, then its depletion expense, its depreciation of movable equipment and immovable equipment, and lastly is the interest expense. Now let us read the problem. On January 1, 2021, Mika Joy Mining Corporation acquired property containing mineral resources for 150 million pesos. Total cost of exploration and intangible development cost was 8 million pesos. Mika Joy is mandated by the Mining Act to restore the site after 4 years. Based on most reliable measurement, the amount of restoration cost is 12 million pesos, and current market-based discount rate is 10%. On the same date, Mika Joy acquired movable and immovable tangible equipment. The movable tangible equipment amounted to 6 million pesos, while the immovable tangible equipment amounted to 9 million pesos. Geologists estimate that the total units estimated to be extracted is 12 million. It is estimated that, on the average, 1,500,000 units will be extracted each year during the useful life of the wasting assets. The movable equipment has a useful life of 20 years, while the movable equipment has an estimated useful life of 10 years. Actual units extracted in 2021 and 2022 were 1,600,000 and 1,400,000 respectively. Now, for question number 1, how much is the initial cost of the mineral deposit? So, we have here our solution. So basically, in the context of wasting assets, the initial cost of acquiring and utilizing natural resources includes multiple components. So these costs are classified into 4 main categories: the acquisition cost, exploration and evaluation cost, development cost, and estimated restoration cost. So the acquisition cost represents the price paid to obtain rights to extract natural resources such as land nga nagcontain og minerals, oil, or gas. So in the case sa problem, Mika Joy Mining Corporation paid 150 million pesos as the acquisition cost of the mining property. While in the exploration and evaluation cost, these costs involve searching for mineral resources and assessing their feasibility for extraction, like geological surveys, drilling, and technical studies before full-scale mining begins. But in the case of this problem, the exploration and intangible development cost amounted to 8 million pesos. Then the estimated restoration cost, this refers to the future expenses nga required to restore the site to its original condition after mining is completed. So in the given problem, the estimated restoration cost was 12 million pesos, but since this cost is incurred in the future, its present value was calculated using the formula PV equals future value over 1 plus R to the power of n, wherein ang future value is 12 million pesos, the discount rate or R is 10% or 0.10, and the number of years is 4. So to calculate, we have 12 million pesos divided by 1.10 to the power of R, which is equal to 1.4641. So the PV or the present value is equal to 8,196,161. Therefore, to sum up everything, 150 million pesos plus 8 million pesos plus 8,196,161. So the total initial cost is 166,196,162, which is letter A. For number 2, the question is how much is the depletion in 2021? Now, unsa man dining depletion? So, depletion refers to the systematic and rational allocation of the depletion base of a natural resource over its useful life. Ug ang depreciation is the systematic allocation for the depreciable amount sa property, plant, and equipment, and amortization is the systematic allocation for the amortizable value of intangible assets. Then, ang kaning depletion, mao ni ang systematic allocation para sa wasting assets. Now, in computing the depletion of a natural resource, the units of output method or UOP is often used. This formula is depletion equals total cost of the wasting asset minus the estimated residual value over units estimated to be extracted multiplied by the units extracted during the year. So, nakuha na nato ang total cost of wasting assets, which is the answer of number 1, that is 166,196,162 divided by the total estimated units to be extracted, which amounted to 12 million units. So this equals to 13.85 per unit. Then multiply this to the units extracted in 2021, which is 1,600,000. So this equals to 22,159,488 pesos, which is letter B. Now let's move on to number 3, which is how much is the 2021 depreciation of the movable equipment. So basically, ang depreciation sa usa ka equipment shall be systematically allocated over the asset's useful life. The useful life of the asset depends on whether kana nga asset is immovable or movable. So in this case, since kay ang gipangita is depreciation for movable equipment, then the depreciation is based on the life of the equipment. So we will use the straight line method, which is depreciation equals depreciable cost over the useful life of the equipment. So that's simple. The cost of movable equipment, which equals to 6 million pesos, divides the useful life by 20 years. So the movable equipment in 2021 is 300,000, letter A. Now in number 4, we will compute the depreciation of the immovable equipment for 2021. So since the depreciation of immovable equipment ang gipangita, so the depreciation is based on the life of the equipment or life of the wasting asset. So if the life of the equipment is shorter, ang atong gamiton is straight line method. But if the life of the wasting asset is shorter, we will use the units of output method. So since the useful life in years using the estimated units to be extracted each year is shorter than the useful life of the immovable equipment, so ang atong gamiton is the units of output method, which is depreciation equals depreciation rate per unit times units extracted, where depreciation rate per unit is equal to depreciation cost over units estimated to be extracted. So the cost of immovable equipment is amounted to 9 billion pesos, and the total estimated units to be extracted is 12 million. So this equals to 0.75 per unit. Then multiplies the units extracted in 2021, which is 1,600,000. This equals to 1,200,000 pesos, which is letter B. And lastly, the question for number 5 is, how much is the interest expense in 2021? So interest expense is calculated on the present value of the restoration cost, which is initially recorded as a liability. Since the restoration cost is a future obligation, it is discounted to present value using the company's borrowing rate. That is 10% in this case. So simply multiply the present value, which is 8,196,161, by the interest rate na 10%. This equals to 819,616. Thus, the interest expense for the year is 819,616, which is therefore added to the restoration liability, increasing its present value at the end of the year to 9,015,777. This follows the unwinding of the discount approach in asset retirement obligations, where the liability gradually increases until it reaches its full future value, nga 12 million, by the time restoration occurs. So that would be all for this chapter, and now Zariel Pagalong will discuss about the investment property.
Good day everyone, I am Zariel Pagolong and I am going to talk about Chapter 21 Investment Property. So, IAS 40 investment property is a property, land or a building, or a part of a building or both, held by the owner or the lessee under finance lease. It is to earn rentals for capital appreciation or both. Examples of investment property are land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business. Another is land held for a currently undetermined future use. So now I will proceed to read and analyze a problem about investment property. So on January 1, 2019, Pastillas Corporation purchased a building at a cost of 3 million pesos. On the same date, the building was leased out under an operating lease. The company's policy regarding depreciable asset is to depreciate using straight-line method over an estimated useful life of 20 years. The fair value of the building at the end of 2019 and 2020 is 3,100,000 and 2,450,000 respectively. On January 2, 2021, the company terminated all lease and sold the building for 2,990,000, incurring all disposal costs of 120,000. Based on the above data, we must answer the following questions. First, if the investment property is accounted using the cost model, what should be the amount of the recognition gain to be reported on its profit or loss in 2021? Second, if the investment property is accounted using the fair value model, what should be the amount of the recognition gain or loss to be reported on its profit or loss in 2021? For the solution of question number 1, under the cost model, investment property is recorded at its original cost and depreciated over time. When the property is sold, the gain or loss on the recognition is simply the difference between the net selling price and the carrying value of the asset at the time of sale. So, to determine the carrying value, the building was purchased on January 1, 2019 at a cost of 3 million pesos. Since the company uses straight-line depreciation over a 20-year useful life, the annual depreciation is 3 million divided by 20 times 18, which results to 2,700,000. And then, to determine the net selling price, the property was sold on January 2, 2021 for 2,190,000. And then the company incurred 120,000 pesos in disposal cost. So the net selling price is 2,990,000 minus 120,000 is equal to 2,870,000. So to calculate for the gain of sale, the gain on the recognition is simply the difference between the net selling price and the carrying value. So the net selling price is 2,870,000 less carrying value, which is the 2,700,000. That will result in the gain of sale of 170,000 pesos, which is letter D. So now, for the solution of question number 2, under the fair value model, we do not record depreciation. Instead, the investment property is remeasured to fair value at each reporting date, and changes in fair value are recognized in the profit or loss. So first, to determine the carrying value under fair value method, the fair value of the building at the end of 2019 was 3,100,000. At the end of 2020, the fair value decreased to 2,450,000. Since we use the fair value model, the carrying value as of December 31, 2020 is 2,450,000. And then, to determine the net selling price, we have the property was sold at 2,990,000 with disposal cost of 120,000. So the net selling price is 2,990,000 minus 120,000 is equal to 2,870,000. And then, to calculate the gain on sale, the gain on the recognition is the difference between the net selling price and the carrying value, which is 2,870,000 minus 2,450,000, which is 420,000 gain on sale, which is letter C. That would be all. Thank you.